Have you ever heard of the paradox of plenty? It's when a country is super rich in natural resources, but its people are still poor. And nowhere on Earth is this paradox more staggering than in Africa. The continent is bursting with wealth, diamonds, gold, oil, cobalt, you name it. Yet, many African nations are among the poorest in the world. So, where does all that wealth go? Who is really cashing in on Africa's riches? Let's dive in and uncover the truth. It's a story of power, history, and a global economic system that's a lot more complicated than you might think. Let's start with the sheer scale of it all. Africa is not just a little bit wealthy, it's a treasure chest for the entire planet. We are talking about holding a massive chunk of the world's most valuable resources. Think about it. About 30% of the world's mineral reserves are in Africa. It has 40% of the world's gold and up to 90% of its chromium and platinum. The Democratic Republic of Congo alone has more than half of the world's cobalt, which is essential for the batteries in our smartphones and electric cars. And that's just minerals. Africa also has huge oil and gas reserves, vast forests, and fertile land. Nigeria is one of the world's largest oil exporters. Botswana is famous for its diamonds. Zambia for its copper. The list goes on and on. From the coffee beans in your morning cup to the rare earth metals powering our green energy transition, Africa's resources are literally everywhere in our daily lives. So, with this immense natural fortune, why isn't the continent overflowing with prosperity? The answer lies in how this wealth is taken out of the ground and who controls that process. This brings us to the extraction system. It's a complex web involving giant multinational corporations, international financial institutions, and local governments. Here's a simplified breakdown. A foreign company comes in, often from Europe, North America, or increasingly, China. They secure a license from the local government to mine or drill. They bring in their heavy machinery, their expertise, and their capital. They extract the raw materials, oil, or uncut diamonds, and ship them overseas for processing and manufacturing. This is a key point. Very little of the valuable processing work, which creates more jobs and higher profits, happens in Africa. The continent is largely treated as a giant quarry. The raw stuff is taken out, and the finished, expensive products are sold back to the world, and sometimes even back to Africa itself. This system ensures that the lion's share of the profit is made outside the continent. To understand why this system exists, we have to look back at history. The colonial legacy is not just a thing of the past. Its shadow looms large over Africa's economy today. During the colonial era, European powers didn't build infrastructure in Africa to help local economies thrive. They built it to get resources out. They laid railways from mines to ports. They drew borders that split ethnic groups and lumped rivals together, creating instability that persists to this day. The economic structures they established were purely extractive. After independence, many African nations found themselves trapped. They inherited economies designed to serve foreign interests, with little local industry and a dependency on exporting raw materials. The newly independent governments often lacked the capital and technology to develop their resources themselves, leaving them reliant on the same foreign companies that had operated during colonial times. This historical setup created a cycle of dependency that has been incredibly difficult to break. So, who benefits today? First and foremost, multinational corporations. These are the giants of mining, oil, and gas. They negotiate deals that are often highly favorable to them, with low taxes and royalties. Investigations have revealed complex accounting tricks, like transfer pricing, where companies sell resources to their own subsidiaries in low-tax countries at artificially low prices to avoid paying taxes in the African countries where the wealth was actually generated. Then there are the foreign governments that back these corporations, securing access to strategic resources. And of course, a small local elite, sometimes government officials or well-connected business people, often gets a piece of the pie through contracts, kickbacks, or legal but lopsided deals. This corruption is a massive problem, but it's often a symptom of a larger system that encourages it. When there are billions of dollars at stake and weak government oversight, the temptation for shady deals is enormous. So, how exactly does Africa lose out? The numbers are shocking. The United Nations estimates that Africa loses more money through illicit financial flows, things like tax evasion and illegal resource trafficking, than it receives in foreign aid and investment combined. We're talking about tens of billions of dollars every single year. This is money that should be building hospitals, schools, and roads. It's money that should be funding local businesses and creating decent jobs. Instead, it's funneled into offshore bank accounts and foreign stock markets. Beyond the financial loss, there's the environmental cost. Large-scale mining and drilling can devastate local ecosystems, polluting water and land that communities depend on for farming and survival. And then there's the human cost. The resource curse often fuels conflict, as different groups fight for control of lucrative mines or oil fields. The very wealth that should be a blessing becomes a source of violence and instability. It's a tragic cycle where Africa's resources are extracted, but the benefits flow out, leaving poverty and environmental damage behind. But this story doesn't have to end here. Change is possible, and it's already happening. There is a path forward. African governments are starting to push back. They are demanding fairer deals, renegotiating old contracts, and increasing taxes and royalties on extractive industries. Countries like Botswana have managed their diamond wealth relatively well, using the revenue to fund development and build a stable society. It shows that good governance is key. Secondly, there's a growing movement for greater transparency. Initiatives like the Extractive Industries Transparency Initiative push companies and governments to publish what they pay and what they earn from natural resources. This helps citizens hold their leaders accountable and fight corruption. And finally, there's a big push for beneficiation. That means processing raw materials locally. Instead of just exporting raw copper, for example, a country could manufacture copper wire, creating more skilled jobs and capturing more of the value. This requires investment in education, technology, and infrastructure, but it's the ultimate path to breaking the cycle of dependency. So, the next time you see a headline about Africa's poverty, remember the other side of the story. It's immense wealth. The problem isn't a lack of resources, it's the system that extracts them. Changing this system is a monumental task, but it's not impossible. It requires strong and accountable African leadership, a global push for corporate transparency, and a fundamental shift in how the world engages with the continent, not as a quarry, but as an equal partner. And it starts with us, by being informed and asking the right questions. What do you think is the single most important step Africa can take to reclaim its wealth? Is it tackling corruption, demanding fairer trade deals, or investing in local industry? Let me know your thoughts in the comments below. Let's have a real conversation about this. Thanks for watching, and if you found this video insightful, make sure to like, subscribe, and hit that notification bell so you don't miss our next deep dive.